I think if you're in your early to mid 20s, in the early 20s, it's learning, right? Let's be honest. You don't know anything around what you would want to be doing in your 30s and 40s. I'm guilty of that. I probably spent not more than 3.5 years in any gig in all my, how many, 13, 14 years of experience before Blume. I had 3 of those 3-year-ish gigs, and unfortunately in the other cases, I don't think it was my fault. It was just circumstantial that I had shorter gigs. So you're discovering yourself in your 20s, and I don't expect miraculous journeys to start in the 20s. It's not like VCs have not started in their 20s, but more often than not, a lot of them come for the training and the learning and skilling and wanting to be in startup journeys, and it funnels out. But in the 20s, I think you should think of it as an unbelievably good MBA, right? I don't think there's any substitute. I mean, people say, go to a startup, it's crazy, you'll get a great experience. I think I can't dispute that a startup founder's office kind of role or a product role, if you can crack one before your MBA, is probably as good, if not a better substitute than an MBA. You just learn a lot in an unstructured fashion, but you still learn a lot. In venture, I think there's a little bit more structure, little lesser pace, a lot more self-motivated study because you're not going to get pushed on daily goals or monthly goals like in a startup. But yet, the way you learn it is a little bit more of a research orientation as opposed to an operational orientation, in my view. And you get to play with projects as you would in your final year of engineering or in your MBA project, where you can set up something that the venture firm does not have. And I think that's what most people who have spent even a couple of years in the last 12 years of Blume have realized that they've been a part of something new, revealing to themselves and to the firm, and got a lot of plaudits for it, both inside the firm and outside the firm. Lead Tribe, Indus Valley Annual Report. All of these have been efforts where mid-20 somethings have actually been a critical part of establishing them or helping or anchoring these efforts with the core leadership team. So that's I think the joy of the 20s. Now, same trade-off as I said before. If you believe that should come at the best compensation in the market, I think you're unfortunately understating the value of what you get here inside of a venture firm relative to a very straight-jacketed job in a functional department or in a functional or a very large firm, which will not give you these opportunities, both the research orientation and the thought orientation that it takes to be a great VC or potentially a great founder in the future, and also the entrepreneurial nature of the job allows you to come and volunteer to do interesting things inside the firm. So that's the trade-off. If you're in your mid-30s, I think you need to be even more certain. I would say come in only if you've done enough groundwork in research with peers, with startup founders, with that environment, saying, am I really ready for this? And I'm speaking from my selfish perspective of early stage VC. I'm not talking about all venture capital. Somebody can migrate from private equity to growth VC, and that's a very different journey. But I'm talking about early stage VC, where it's important to understand entrepreneurship, entrepreneurs, and ability to assess risk with much lesser objective information around performance, etc. So you have to be comfortable in your skin to be able to jump into that risk. Once you do, I walked you through some of these parameters before, that you have to think through this as almost a second MBA, right? Or a second tier or a second stage, where you're getting all of this learning, the freedom to be able to engage with entrepreneurs. Within 6 months, you're running your own, pipeline sessions, meeting entrepreneurs. How is that happening? On the back of a banner called Blume, right? Or whichever firm you belong in. And that gives you the license to have conversations with incredible entrepreneurs, and you're learning from them. Just as that presence inside of Blume or another firm, inside of boardrooms, etc., gives you the ability to learn. Goes back to question number 1 or question number 2, where you might have asked, how do you become a great VC? So that training ground for 3-4 years is extensive. And as I said, the optionality lies with you on whether you're going to make a mark for us or for someone else. And if you're not making it for us, then it's all sunk cost for me. I do not think, sadly, that unless you've gotten lucky and delivered as a unicorn on a plate, and you've left the firm and it became a unicorn 5 years later, that's the only attributable genius of effort that you might have left behind for the firm. Everything else, sadly, is substitutable. Everything else is sadly substitutable. It's like, as much as one says, you know, we can game change for a portfolio company, or you picked 5 different pipeline companies. The harsh reality is, whether you were there or not there, whether the partner picked it out of intuition or with your analysis, the odds still seem to be 1 or 2 out of those 5 will actually do well, right? So you can't claim there that, oh, I changed the trajectory of this firm in 3 to 4 years, I need to get like carry vesting. No, none of those work, sadly. And so if you do not reconcile to that, by the way, these reward structures might look different in different firms, but at Blume, we, as I said, we over-indexed for long durations. I'm very keen that I preach that kind of a journey for every entrepreneur who pitches me at seed. I'm not sitting here in my 4th fund going to pitch any differently to a future aspirational VC who wants to join me. You're no different to me than that entrepreneur. And within my firm, I'm not going to allow for different alignment of interests, different incentives, different paths than I'm pitching a seed first-time founder, right? So you are no different in that journey. I'm asking you to embrace that journey and then sort of pay up in terms of time and opportunity cost to know that you are going to make a great VC, and it will cost you 3 to 4 years. My only counterpoint to you is, and there are enough examples inside of Blume without taking names, my counterpoint is, at that 3 to 4 year point, if you feel you're being treated unfairly and you've not been set on a path for great wealth, a great responsibility, there is a checkpoint, and no one will grudge the other side if you don't meet eye to eye on that. You've got great experience, hopefully, in 3 years, which you can transfer to dozens of opportunities out there. Like most corporate venture, most growth has been run by people who have come out of these kind of roles in early stage venture in this country. So there is enough headroom for growth if you don't like that, and if you feel there is no space, there's no room. Equations have changed within Blume. You don't like all of the partners, as I said before. You only like 2, and you know that you can't be a part of a partnership where you don't like the other 3. So there are various permutations, combinations why this might not work out. But I don't think you'll be any worse off, and you will get a massive bump up and an elevation in the industry for having spent that time out here. Whereas if you actually stay here, I think you'll be richly rewarded in the next fund cycle and in the next fund cycle for having delivered the goods. And that's why I think we have 2 new partners this year who have come down unconventional paths relative to other people in other firms, and I think are happy to take the torch forward. And so I feel we want to build an intergenerational firm. We want to build a wider landscape of managing more capital. Too early to say where we will be 3 and 6 years down the line. But that's the path you're buying into, at least at this juncture, and as far as Blume is concerned.
Talking about careers in VC and differences between careers in a VC versus startup. And within that, I'll also try and talk about differences between an early startup versus a growth startup versus a VC. So, when we talk about the venture ecosystem in general, it is a fast-moving, dynamic industry, but not many would probably understand that when it comes to VC in general in particular, one is thinking about it as, one needs to think about this as a quasi-entrepreneurship or if not entrepreneurship. VC compensation is typically 3 parts. And while these 3 parts can have various subparts, and we have been innovating on that, and we'll talk about it in subsequent such sessions. But broadly, it is a fixed salary and maybe an annual variable. Different firms might have different variable composition. Some might have a large variable pot, some might have a small variable pot, and then there is a carried interest. Within the VC also, so far as Blume is concerned, we have a very strong and active platform and corporate side of our work. Most institutions do have corporate side, which includes your own finance, HR, legal, regulatory, marketing setups. And then the platform setup is something which has been fairly unique to Blume. We were pioneers of setting up something like this right on the early days when we started investing in early stage. And this is the platform through which we service our early stage founders and now even growth stage founders for a variety of their needs. So each of these is a different career path. So far as a startup is concerned, before I go deeper on the VC side, it is about either you are joining amongst the first few members of the team, if you're making a choice to be a part of the early stage journey, which is again has those characteristics of entrepreneurship, if not entrepreneurship. As a founder, of course, you are the entrepreneur and you are taking it to the next level and you're underwriting the journey with the investors. But even if you are part of the first single digit employees, or maybe the first 3-4 people who join either the firm or probably the startup, you are in some sense required to be an entrepreneur if you're going to be having a long vision for yourself. Enough people, I would break the early stage into two parts. Enough people who join in, who take it as a job, will operate at a certain pace, will grow, but the startup might have grown much faster, which is where somebody might do well, but eventually there will be bosses or managers who come in between the founder and this particular individual. Nothing wrong with that. It's about everybody realizing what they are good at and trying to focus rather than try and play power games. And there will be people who are really very fast and evolve. They do carry their specialization and continue to keep pace with the founders and the pace at which the company is developing. Like last time I had mentioned, that's the founders who develop fastest, take the company to the next level with their thoughts and capital, and finally it is the next layer of employees that move faster. So there could be people who are evolving at the same pace and keep the pace with the founder and the company. On the growth side, I would say it's a proper job. If you are entering the company at a Series B or a Series C, in some sense you are coming in the middle order of a batting order, where you will take the pace that has been set by your openers and try and maintain or nurture that pace. Or you will be maybe managing a few things or set the tempo if the run rate has been too slow. So it depends on the company to company, case to case. And but it's still a job. There is very little that one can do to change a few things. You're signing up for a certain target and a certain milestone that you will help the company go to. Whereas in the early stage side, you're basically signing up to take company somewhere, and in many a times people don't know exactly where. So that, of course, one can argue that how can you say this? But yeah, on a separate chat we can talk about that in much greater detail as well. It's because the startups do evolve, and neither the founder or the VC, who is the fund manager allocating capital at seed and Series A, sometimes even Series B, is underwriting for the founder's ability to run into that space and create a great value and evolve. And that evolution can sometimes come with a pivot as well. Coming to VCs now. In VCs, either you are part of a platform of a firm like Blume, or you are an investor. As an investor, as you come in, let's say one starts at analyst and associate level. Yes, of course, it's a job at which you start with, but over a 10 to 15 year journey, you're basically going and shooting for trying to become a person who is clearly just a step away from partnership. Yes, it's quite possible that if one is so great and there is track record to demonstrate, the partnership may fast track a particular individual and absorb them as partners as well in the same time frame. But in general, the combination of stint in the firm, understanding the philosophy, coupled with the maturity that it takes a person to identify great companies, not just great companies, but the best of founders, nurture them and help the company to the next level. It takes a decade plus journey at the bare minimum before one can really expect that they can be partners. One can be joining laterally and shoot for a faster pace, like we have had in Blume as well, where there are case studies of people having joined in 2018 and have been partners in 2023. Someone like Sajid, who brought a phenomenal amount of expertise to the table with respect to thesis articulation and the entire cohort of analysts in Blume that started with Sajid joining in. So we've had that kind of a track as well. So that's not something that any firm, particularly Blume, would be averse to. But one needs to acknowledge that it comes only when you're going to spend that kind of a long journey. If one is looking at optimizing salaries, of course there'll be some of the other firm that can pay more. One can really never insulate yourself from a potential opportunity loss. So one has to put that line in the sand and say that yes, I do acknowledge, but what are the part of the compensation that I'm signing up for other than salary, and what is the path to on my career which is more important than the job that I'm actually going to do. So where does one get the ability to kind of develop that vertical and own that vertical for a sustained period of time and be a quasi entrepreneur or intrapreneur, like I've used that word, with due credits to Sanjay in Blume, who keeps using that word during the older days. So one needs to really think on these lines and plan a career. Jumping firms, jumping jobs, it's common par for the course, but in a early stage investment house, or for that matter in a growth stage VC as well, firms have their own philosophies, and it does take some amount of time and building of a certain skill and goodwill to be able to come to terms with what is happening. So it's not really a great idea to try and think about these as 5 stints of 2 years or 3 years each to get to the best possible financial outcome, best possible designation. Those things may happen 1 in 100, but that's at least the philosophy that we don't endorse, and that's not what we have seen as the best playbook. For us, like I said, it's about coming and working deeply on a certain thesis areas, own that, and everything that you build is a joint IP that you have built with the firm, and that stays with you as a due credit rather than go into some footnote about what your existence was. This is a canvas where you can really carve a niche in terms of what you do with various founders. The VC space is what I'm talking about, and that also accompanies with itself a gestation period which one needs to put in. When a VC typically pays salaries to people, they are paying it from their fees. So VC journey, let's take a fund of 100 crores, which is what the fund 1 of Blume was. There would be a 2% per annum management fee. These fees taper down as the tenure of the firm increases. Typically it's a 10-year firm which one sets up for, and in this 10 years, the first 5 years one is able to draw 2%, and thereafter maybe 1.5 or 1. If it's a small fund, they can draw a little more because LPs will be empathetic to the fact that you need to build a team and you will need a little more luxury of fees. But if it's a large enough firm, the fees can typically taper. So it is from these fees that we are paying ourselves salaries, we're paying to our team and colleagues. So one really needs to understand that from this 2% per annum, what we are drawing, we have to achieve 3 to 4 things. We have to run the organization, which is salaries and other expenses that need to be able to continue operating and supporting founders, identifying the best of relationships. The second thing that has to be done using the same management fee is one needs to build your own corpus and strengthen the VC manager's balance sheet, because you have to keep some reserves so that in the future when you launch a new fund, you will be required to put in sponsor commitments. Not everybody, the beauty of the VC is that not everybody needs to have boatloads of capital in their bank account. One can keep building the firm gradually and scale up. That's exactly how we have started off as well. None of the partnership and founders came from mega rich backgrounds where we could put in large chunks of capital. One has to show skin in the game, which is what is called as sponsor commitment, and you have to keep building that buffer using your management fee. So that's the second usage of the funds that comes. And the third use of funds is the process of converting the fund into a fund house or building an institution also is from that. What I mean by that is, yes, one will employ people, but few firms would do a great job of actually building a great team, servicing the founders by way of the platform which we have been reasonably successful at, and that institutionalization process requires capital as well. So it is quite possible that even after 10 years and 12 years of running the firm, one would realize that we do underpay ourselves significantly, not so much at the level of the team, but yeah, it is about taking those short-term sacrifices to kind of meet those larger goals. And anybody who kind of cracks that code in the VC, apart from all of the skill sets and the EQ that one brings to the table, one gets that economics that this is a 10-15 year journey that I'm signing up for. I think it becomes very, very easy to rationalize it, which is different. In a startup, it is possible that at a growth stage one can get instant gratification. A Series C startup or a Series B startup hands down can pay much more than a fund which is $100 or $150 million. We have seen that some of them will pay even more than a $300 million fund, depending on the firm's payout philosophy. Even we do believe that one needs to build, when you're building out of management fee, it's like taking money out from the investable corpus. The money belongs to the investors, and one needs to be super frugal about it. When you're drawing that money, yes, it is legally available to you because that's a contract that you have signed up. But at the end of the day, every money not taken allows you to invest more and build more carry. And every money taken, you better do a great job of using it well in building a great institution. And that is a dynamic that kind of plays a little differently when it comes to startups. In a growth startups, you are looking at a certain milestone, and one has to look at traveling that journey in 18-24 month period. The founders are making all the sacrifices. The L1s who joined early are making the sacrifices, but most employees coming in later might not need to make those sacrifices. So for them, it might be instant gratification. So VC journey is lot closer to the journey of a founder, and therefore the rewards also can play out that way. Of course, you are, unlike a founder or an L1, you are not taking crazy hit like I explained earlier, unless you are the founder of the firm or amongst the first 3, 4, 5 employees of the VC firm, which includes some of us. Then you are of course taking that kind of a hit. But otherwise, the risk reward do outweigh. Just to give you a simple example to sum up with, a founder of a successful startup which has run to a unicorn outcome versus salary of a partner of a VC firm will definitely be where the founder will win the race. And I can map that with L1s also. So if a junior partner in a VC firm was joined in after 4-5 years, mapped with maybe a CXO in a startup was joined after Series A, the rewards also will be similar, where the CXO in a startup might possibly end up getting higher rewards. But over a period of 10, 15, 20 years, as you launch multiple funds, as you get senior, as you become a senior partner, you definitely start bridging that gap. And on a long-term duration basis, it all kinds of equalizes. So one needs to give the instant gratification versus delayed gratification a serious thought. One needs to be proud of the journey that comes with the early stage company and a VC, and take that into consideration when making these choices. So in terms of working with Blume as an institution, I think one does make some trade-offs. There are trade-offs that we spoke about and I shared during my last video, where I talked about careers in an early stage business versus growth stage versus a VC. Now just going a little deeper and trying to articulate some of those trade-offs vis-a-vis maybe other firms. So first and foremost, like I said, I've been consistently saying and talking about delayed gratification. Instant versus delayed is a settled debate in the mind of anybody who comes in a firm like Blume. When I keep talking about delayed versus instant gratification, it's not that we are kind of starving and not paying. We pay market salaries, but one needs to put in perspective, like I had briefly mentioned last video as well, that we are very conscious of the fact that we are drawing management fees and building the institution. So it's a carry that ultimately drives us, and that is how we want to orient everybody who joins the firm. And that ultimately also kind of is directly a function of the value that has been added to by a particular individual. So we do come with this thought process that when you're joining Blume, for example, I have been leading fintech investments, have been on boards of companies like Slice, Turtlemint. Sometimes you're on the board as a director, sometimes an observer. And through these last decade plus of journeys, we have seen very, very interesting dynamics play out. So let's take the current fund. We have a $250+ million fund. We are 5 investment partners in the firm, dividing the corpus into these 5 near equal pots, and we are allocating capital out of that. So when the early stage capital, which is roughly about 30 to 40% of the corpus, and the remaining is reserved for the growth. At an early stage, you end up dividing that corpus into near equal halves, near equal parts, like I said, so 1/5 each, and then the growth part on the follow-on parts are reserved on pure merit as the companies grow up. The early stage checks are basis thesis that we have developed. So these are mini organizations and profit centers within Blume is how we treat it. So it's very easy to say that it's a $250 million firm, and even more complex and glamorous to make it sound like a $600 million firm, and someday it might be a $1 billion fund house. But we have tried to whittle down this for the purposes of making sure that it's a wide enough canvas for everybody to get their share of rewards, space, credits, etc. And we divide this into more like a 50 million sub fund within the overall firm. So each of the 5 of the check writers, which is Karthik, Sanjay, myself, Arpit, Sajit, each of the 5 of us track a certain horizontal or a vertical. Fintech, I call it as a horizontal. Because it has overlaps on various other verticals and sub verticals within that. So broadly, we would look at making maybe 5 to 7 investments each. So I would look at financial services and fintech investments along with my colleagues. And this subunit would comprise of at least one person who is being groomed to be a future partner. And hopefully this individual, if he or she sticks around for the next 10-15 years, and they are then clearly on the right path to be owning that vertical as well. The transition is not literally at a 10-year point or a 15-year point. The transition happens much faster actually. So if we have somebody who is aligned and signs off on the keeper test, it's more than legal document. It's more like what you feel about that individual and how crucial that person's journey is vis-a-vis the Blume journey, and how do they understand and resonate with the Blume values, the success, the track record, the ability to work with the founders, understand and carry the platform vision of the firm forward. So multiple set of factors that matter. As soon as that person is kind of exhibiting those, that person has the ability to be able to make an investment call jointly with me and rest of the members of the investment committee. So practically, Blume is one of those unique setups where if you're joining a practice, you are clearly mapped to a vertical and a partner who is driving that practice. And as a part of that, you have the opportunity to really scope out the entire vertical. And from those 6 to 7 investments or 5 to 7, whatever you make during those 3-year cycles. 3-year cycles means a cycle from which your fund journey starts to where the investment period of the fund is practically over, after which you don't do new investments from that fund. So a fund closure, first close might happen on day 1 and it continues for almost 1,000 days when you are still searching for about 35-40 new investments divided between the 5 of us. So this colleague of ours who is assisting us is kind of the co-pilot, and as the word Karthik described in one of our internal meetings, and this particular co-pilot and the concerned partner is jointly making those decisions and then taking it to the IC for their vote. So it's like running a $50 million fintech fund if you're a part of the Blume fintech team. Similarly, you're running a $50 million SaaS and enterprise fund if you're working with Sanjay on that, where you're dealing with cross-border investments, and likewise with other verticals as well. So that's a very unique thing. You are having the ability to back your conviction, thumb the table, make investments of companies and founders that you like, work closely with them, and then you have an ability to actually hand it off to a growth partnership as well, which we have in the firm. So there is a formal handoff which is possible that we have created. There are some partners who might operate the full straddle. There are some who will be very specialized and become very valuable for the early stage companies. So both career opportunities are possible in a setup like Blume. So we have been very conscious of the fact that in a VC, it is not a D2C business where you will go and create a massive assembly line of products and distribute in a uniform condition. We acknowledge the fact that we are in the rinse and repeat business where the playbook of early stage investing, platform services to the founders has been set, and each career of each person who is part of the firm may be shaped differently. There are enough people in the firm who have the potential of reaching a platform partner as well. So like I said in one of the earlier videos, I joined and spent most of my time earlier on. Apart from very few investments that I did and gradually kind of spent more time on portfolio thesis building investments, a fair bit of my time I did spend on the platform side of it, working closely with the founder, setting up the Blume internal platform, doing our own fundraising as well, which I continue to do. So there is a scope to be able to carve out on that direction as well, where you are servicing the founders and you are still in the future likely to end up becoming more like a platform partner. So multiple career choices, multiple paths are possible to the extent you stick to a playbook and specialize in that, and within that you keep evolving and working deeply with the ecosystem. Hey, so you can subscribe to the Blume channel to keep in touch with us and understand what we think and how we are looking at building this institution. Thank you. All the best.